Hi, it's Tyrone here with the weekly market analysis for next week, starting from the 5th of February. So I thought I'd get this one in now, so when the market's open Sunday night, you know exactly what I'm doing for next week. I'm going to start, because this is a fantastic opportunity, but I didn't want to put this one on, but I am going to put it on for the fact that it might confuse some of you who are following what I'm doing, which is the trend structure. Now, I always use this monthly higher time frame. Now, there's two things that's going to be happening in this monthly. Well, there's three things that's going to be happening. It's going to be showing me direction, it's going to be showing me a range, or it's going to be a complete mess. If it's a complete mess, it normally means I have to look at an even higher time frame, which means I have to kind of expand the charts, maybe reduce it and see what's going on the big picture. So I still trade that way. Everything works the same. The supply and demand principles are the same, because this is what the markets pretty much move by, supply and demand. It's just understanding it, and it doesn't always show itself in the same light, you know, like a particular close above with the candlesticks that I'm showing following levels. You know, it depends on the flow of the market on that particular time frame. The cycles on the yearly, the 10 yearly, the monthly, the daily, there's all cycles within the market of supply and demand, and it's just applying timing just to keep your probabilities high, because you don't want to be trading every single supply and demand level. You just want to filter out the ones that are going to give you the least profit, or highly likely not to work, and go with the ones that are more highly to work on the long run. So what I've got here, I'm going to start with the Aussie CAD. I've got these pairs that I'm looking at on this particular broker, and the Aussie CAD, initially we're in a range bound market. Why? And again, the same principles. If we look from this high to low, if you look at the 50-50 area, you know, we don't have to put a moving average. Quite clearly, prices may be slightly down, or pretty much even in the balance, because we've made a high here, then we've got a low, then we've got a lower high, no closes by the way, but a lower low. So we're looking at this, that price, you know, could, you know, the balance is starting to gently shift, just gently shift to the downside, but it's a range bound market. And if I look where the 50-50 area is, I'm below it. So the trend of supply and demand, let's say supply, is to the downside. But if we analyze it like this, did I have a close below pivot low? You know, there's no close. No, I haven't. Now, even if I did, if price retraces within 1-2 months, then there was a possibility on the range bound market that this could have turned here. And it still could, by the way. Who knows what's happening on the bigger picture? Okay, that's going to influence this, but there's no point keep going up and up and up. You've got to look at the time frame that I want to get in sync with, and then find the lowest risk and highest reward. So this is a range bound market. It's as simple as that. In range bound markets, I don't use the supply and demand in the middle of the range. They just fail. It's just through backtesting and backtesting. They fail most of the time, or they get taken out, then price turns. There's so much that happens that's uncontrollable, but the patterns are still there, telling me this has got a high chance of reaching area up here. It's got a high chance. If I want to be really safe, maybe have a target here. So now this is not a trend, and this is a range, but because of the volatility, and we're looking pip wise from top to bottom, you know, 790 pips, and if I'm going to buy down at this extreme here up to here, I've got more than a 5-to-1. So why am I buying down here? Or why? I wasn't going to put this order on, but I decided to do it. First of all, if we look at the weekly, and if I was to just draw roughly a trend line structure, let's go from that to that. That's more of the pattern here. That's the fake out. You can quite clearly, we've closed cleanly above the weekly demand. So I've got two candles up, and we've got this very strong move down. This is what I like. Now next week, if price opens and drops, and it could actually open on Sunday night, Monday morning here in the UK, and plummet into this level. So I definitely want to have a low risk buy So I've got 50 pips there. My profit could actually be maybe a little bit higher. What I will do is, when we get near there, manage it aggressively, because once I'm over a 5 to 1, I don't want to really give back all of that profit. So, you know, when we start to get up this region, I'm looking at 300 odd pips. For the sake of 50, I'll be over a 5 to 1. Then I'm going to start managing it, whatever the daily, the 240, or even the 60-minute levels provide. I have to analyse that as it happens. So also, if price, we're into this weekly, you see this strong move in the daily. If price was to react before that, because it might not reach this low, and I still want to target up here, it might not reach this weekly level. So what do? The daily is going to give me no information because of this strong drop. But if I drop it to the 240 and enlarge this, look at these nice levels we've got. All these levels, these are not, like I said, if anything breaks lower, these are supply levels, but not necessarily levels that I would trade because of the rules of closing below. But we've got this one here, closed below, price has reacted to it. We had this level, and then we had this level, and then we've got this level. So basically I've got a number of supply levels that haven't been taken out. So as soon as one of these levels, providing that I have bounced into, and I'm looking at the candle of the base, the whole candle with the wick, okay, that just tells me I'm in the area now where the probability of it working is quite high. So as soon as we take out the nearest form of supply and close above, then the rules apply with an equal distance back down, etc., to enter. So I may have a lower risk and an even higher reward, although I'll be getting a little bit higher, because I might have a 30 pip risk going for 300. Then your reward to risk is much higher. So the downside to that is if you turn too soon and the market isn't going to push up, because we are in a range on this monthly, so the influence is 50-50. Anything can happen. You want to be getting in down here and getting out up here. Anywhere in the middle becomes a little bit tricky. However, I've got rules for that as well. This is, you know, to take a shot at this. If we, let's say, create a demand level here, just as an example, if this creates a demand level, we have a strong push up and close above here of, I don't know, let's say 8 hours, 12 hours, maybe 3 candles up. Price retraces and I have an order to buy here of maybe even 50 pips, but just as an order to buy, and price reacts and then drops and takes me out. I don't start taking then every 240-minute demand level. Okay, I don't just willy-nilly take it. What I normally do then, if I know that the 240-minute demand levels are not really holding already, because that's what should happen. If you're catching the extreme, if you're catching the turning point, they will hold. If not, I've got something wrong. Okay, well, I'm doing the right thing, but the market's telling me, hold on a minute, you know, don't just keep taking these. What I would do then is lean on the daily to see if we have some kind of rally, drop, base, drop, and then maybe we might form a base here and then a strong rally. Now again, if we do take that 240-minute and get taken out and it creates some level here on the daily, I may be waiting for a close above, or price may drop all the way down, doesn't meet entry and turn in this area. If we get another leg down, so let's say, I'm going to reduce this now on the 240, let's say I create this demand level, price pushes up, I have an order, it comes down and stops me out, messes about, comes a bit lower, but I get another 2 or 3 decent supply levels, and I've moved deeper, and the structures show me that I've got some trending structure to the downside. As soon as we create another demand level down in this area, I'm going to take it again, and then eventually I will take this at the extreme, providing we're still within this 2 weeks. So basically I've got all next week to look for opportunity on this Aussie CAD to come up to this target. So I wanted to get that out in detail to show you. I've also put some other trades on. I'm just going to go through very quickly the levels that I've got, just so you can see what I've altered. Looking at this, by the way, this Aussie yen rally base potential rally. I can't do nothing on this now because the weekly hasn't it isn't in sync. You know, the candlestick's down, there's nothing, this is all basing. I don't know where this is going yet. I want to see some kind of direction on the weekly before I can make a decision. The Aussie dollar, we haven't had a close, good sign of potential range, but we are up. So I've got to look at the fact that if we break from this area where we've had 1, 2 green candles up all the time, you know, this is a good chance of a retracement, but it's a range bound market and it's also a weekly level, so that's why I've got my order down here. But if this turns, you see this weekly, if this starts to turn on the daily and I start taking out any daily levels of supply, then I'm going to jump straight on the daily. Ideally, taking the highs out is a safe bet as well. Once you start to take and close above on the daily these highs, it's an early signal that price may be reaching for another month, maybe another 2 months, you know, and you start to get this kind of pattern. If you imagine here, 2 red candles down, we've got 2 red candles in there, 2 down, it gets a bit scrappy, 2 down, but then it decides to push a little bit further. And then we got, you know, 4 here, 3, and then all of a sudden you get this move, bang, because we're starting to break out and price is rolling over. Now the same thing could be happening in this area. This could be just a flag and then a strong move down on the big picture, or it's moving and the momentum's going to build and then suddenly bang, it's going to pop, because this area is where the last drop was. You could say we got some kind of support area here, so there's plenty of room. Okay, but I'm not even going to, I don't even look at the support resistance because we don't know where price is going. If support resistance again works all the time, which it does sometimes, you know, you'll be taking trades all over the place. What I'm doing is trying to filter out my losses and increase my reward. That's my primary objective. So that was just the Aussie dollar, so there's nothing on at the moment. The CAD yen, nothing there. Not the CAD yen, that was the CAD Swiss. The CAD yen, we've got potential rally base. We don't know where this is going. Look, it's 50-50 on this monthly at the moment. It's showing it more on the weekly. So if you was to range play, it would be down at these extremes, but again, I'm not going to talk about that until I see something nice and clean. I've got no trade. This is just, you see, we've got a range bound slightly up, but the range is 50-50 and we're near that extreme, so I'm not going to trade until we get above that, so maybe a few months down the line. However, this Euro Aussie uptrend, we've had the pullback within the time limit. In fact, it's very strong. If it's reacting like this already, this means very strong momentum. That's all it's told me. This is the level, it's not even reached it. So the weekly is starting to produce some demand levels, but we haven't, because I don't know what's going to happen here. Could potentially be a range bound on the weekly. We haven't actually pushed above this high yet, and the weekly hasn't had really a decent demand level. This to me is a demand level, and I tell you why. First of all, where we've got this area up here and we close below, not really a proper supply level because we're not taking out demand, but we've closed below, and it's a pivot high. Then we've got this bit of a base, and then we just based here for more candles than what is in this base. So this to me is a bigger area than what this is, just for that fact, and we're now going to potentially get a close above. But what I have got is, because the weekly is in sync with the monthly still, we've not taken, since down here, since this area here, or even this area, since this move up, we've not taken out any pivot lows. So any crappy demand, so to speak. So we've not taken that out. So the chances are this is going to just keep pushing. And it's the first green weekly candle. Now this is the area on the daily, so this is where I will probably put an order. I will see what happens next week. I'm holding off on this for the fact that I want to see if we just push up and close above here on the weekly, making this area very strong, and then allowing the daily to retrace and then produce some new levels. So this is kind of not the highest probability, because of the fact that we haven't got a close above on the weekly, although we are in sync with this monthly and the weekly momentum. So start to lean on the daily demands, take a little bit of a risk there, is well worth it. Euro CAD, now this is the extreme of the weekly here. and this was the extreme of the monthly. But as you can see, we've got from the low here 3 candles up, but it's the 2 green candles, and then I got 2 in the base, or 1 in the base, 1's dropped. What I need is, this is only the monthly open, this could be part of the basing candle with a strong move down. So this order at the bottom is still valid, because this isn't a green bodied closed candle, this is just a wick in my opinion at the moment, until we start to push higher, and it's still a wick, and then push higher and start closing on the weekly. So I'm watching very carefully. If the weekly closes up here, this is a fantastic weekly area, and then this is still potentially a monthly area if we have a very strong drop, because it will be a wick on the monthly. So I'm watching the daily, because if we start to go above, the trend is up, we're in sync with the monthly, we're in sync with the weekly within that timing. This could be a little bit of a base and then rally, so it'll be a breakout area where nice to lean on the dailies. So we'll see what happens next week on that one. The Euro Swiss, this is the perfect counter trend opportunity, because we've had no closes above, but we won't take this. I'm not going to take counter trend on this monthly. I'll do the range ones, but not the counter trend, because this is a close below all this rubbish. We haven't had a daily level. This was it, and it's now gone because of the amount of candles down, and then we based it. It's a big base here, which is much higher than this daily level, so I need to see what happens. Nothing on the euro pound I want to discuss. Euro yen pushing up again, could be just a wick, but the trend is up. If this weekly closes, look at this fantastic level. If we drop into this, I want to wait for this to close. I'll be putting an order on and getting into this, so I probably will make a video on Monday morning in the UK here and get it out to show you the new orders. And that weekly level is also a daily level, but we have got a daily level now. But I want to see this weekly close. If this doesn't close above here, I'm not too interested in this. Okay, I want to just see some kind of confirmation here, because this will become a very good level. It's right at the end of the week, you know, so it's Friday. This really needs to close up here now. If it doesn't, this isn't a very good level. The profit margin is very, very small, and the probability is going to be low. Euro New Zealand bouncing from this level, 2 up, 2 down. Lovely level here, already reacted. Again, the weekly is not giving a direction, it's based on the range, but the monthly is up, and the weekly has taken out a demand level by this wick. So I don't know what's going to happen here, so I'm waiting for a weekly close above this mess, because this is a drop, a base, a drop, but not a solid level, but it's a level of supply. Okay, let's put that in here. It is a supply level that I want to close above to tell me to get in sync. So I'm watching this daily. If we close on the daily and the weekly, I can have an order down here and an order on the daily to go long. The euro dollar close above, fantastic monthly level down here. I was looking at these closes to work out, this was only about a pip or two when it closed above this high. So this is the actual level. So this is the weekly level. I've got 1, 2, 3 candles. I can have 3 weekly down candles to make an entry at this level. Again, I'm watching the daily. Now the problem is, as we've already moved up quite high, and there is potential, looking at the previous 1, 2, 3, 4, 5 candles, 6 from the base green, we've only got 3, so there's potential for this to still rally out of here. It might based on this pattern here for a little bit and then continue higher, which means this pattern creating over here may give me an opportunity to get in on the daily or the weekly. Pound yen level, you can see close above, so I'm waiting for that on the monthly, waiting for the weekly to close above. I was waiting for the daily. I was put that in that just to keep an eye on that, and it didn't close above, so we've got no levels on the pound yen. This was a level that's going to be gone now, because we had a close, but since this messing about and pivot high, the only levels I've got is the weekly and the monthly. The New Zealand dollar, a good range bound. We talk about this, so it's an expanding range, I call this, where price is becoming more volatile as time goes on. So it's an expanding range, but nevertheless a range. So ideally I'd be short in here, or waiting for price on the monthly to close kind of above this pattern to then get on board with very strong move, hopefully to the upside. Dollar CAD, fantastic that we're now breaking from this area, getting weaker. We've created a pivot high. This is not a supply level until we close below, but we're in the direction of that momentum. Nearest area supply, which is a big one, and now we're rolling over. So this is the area of weekly supply. There is not been any daily, there was here supply because we closed below, we didn't have the retracement, but since then nothing. So there's a good chance that price is going to retrace up to here. Really is a high probability that we're going to get a nice pullback for an entry on this weekly. And this could be a base, this week close base, so it's next week I really need to make that entry up here. Or maybe look at the 240 in this area. In fact, anywhere in this, because this is the base candle right here, anywhere in this area I could start to wait for 240 because we might not reach that weekly high. So that's another area that I'm going to keep an eye on. So I'm slowly introducing you to a little bit more deeper analysis of the markets, how I'm looking at it. Range bound, breaking, close below on the monthly. So straight away I've got a close below on the daily. This is an order that I've got in. That's why I wanted to post this. There was the close below. Everything's down monthly. I don't know if this is going to have a big retracement, which means this level won't work, but then I can wait for the pullback again into this. Oh, didn't want to do that. Let's just put my stop in the right place. 45. Roughly there. What I'm waiting for is to get in this area, drop this down to 240, and maybe I'll get the 240 level to get on board if I'm around. If not, then I have to rely on the fact that hopefully it'll produce a daily level and I can just put that on and forget about it. Dollar yen, range bound, so I'm not even going to talk about this. Look at where the wicks are though and what prices do. It's reacting to the upside. We haven't had a close below, but it's early in the month. This could be a retracement for a continuation to end up with a close below. Who knows? So this might be, but it is a rally flag, potential rally. And all I can say is that if you're range bound trading and you're in this sort of area, because price might come deeper yet for another month, we might end up coming right the way down here in about 2 weeks time with a big wick on the monthly, so below this weekly, and then we might see a daily level form like this. But because we're reacted from the range and price might be rolling over already, this would be the nearest area of daily demand. But I'm not going to take this for the fact that there is room for this still to wick a bit deeper. That's all it is. It's not really touched, you know, this level's not inside any of these kind of wicky areas, you know. So down here it's a safe bet for these kind of levels. And that is it. I wanted to get that out now before the Sunday open and the close of today, just to see how you get on, and also to point out that I've opened up on Google Plus a community now. So if you search for my name on Google Plus, Tyrone Archer, I've called it I've called it Forex Study, just so you know what you're looking for. But my email's tyrone.archer7550@gmail.com. I don't want you bombarding me with emails because I'll probably end up just spamming you. But I have got a community there that's private that I'm just opening now. There's nothing been posted except what I've posted. But if you're interested in joining that, just to follow along, because I'd like to put some updates sometimes in there. Take the videos a little bit deeper, slowly, and do this market analysis. And you know, the community that builds in there, I'm going to put a little bit more focus on over the next few months. I'm still going to keep doing the YouTube. There's no cost involved. I'm not charging. This is just completely a focused area for people who want to study the supply and demand the way I'm studying it. You know, I'm not interested in your methods, what you've learned somewhere else, and what this video is great. I've seen everything. I've been doing this nearly 10 years. Well, I have just over, well, 10 years. So I've seen everything. I know what I'm happy doing and what I found works for me. So it is pretty much, if you've got any questions regarding the way I'm doing it, if things don't make sense, if I contradict myself, then I can go into it deeper and explain why and how I'm still following the rules within the rules to, like I said, with range bound markets as a good example, to still catch these low risk, high reward turning points and high probability. And that's it, guys. Thanks for watching. Thanks for subscribing. Don't forget to give me a thumbs up, and safe trading.